What's up, Andy?
What's
How you doing,
going
buddy?
on?
Do you have a good Father's Day, man?
I did. How was yours?
It was great. I did absolutely nothing, and it was awesome.
Exactly.
It's exactly what I wanted. Just leave me alone for the day. Got a lot of yard work done. Worked on my tan. Got rid of these coon eyes that I have because I was wearing glasses on Memorial Day, and I fell asleep and I got fried. I had nice goggle marks.
Nice.
So we have very special guests with us today, fellow veteran lending counsel and veteran mortgage warrior, Blue Star mother, loan officer, overall VA badass, Jennifer Miller. What's up, Jen?
Hey, how are you doing?
Oh, fantastic.
Thank you for having me today.
It's a Monday. Andy's got a short week this week. He's leaving for Nashville on Wednesday. So he's on vacation mode. And I think 90% of the banking world is on vacation today because of Juneteenth. But
yes, the new federal holiday that everybody forgets about now.
It is. It just kind of came up out of nowhere. So
yeah.
Anyways, so what are we going to talk about today? We're going to talk about the environment that we're in right now. Last week we talked about the financial Armageddon, doom and gloom, that what the media has been leading us to believe, and what a lot of non-experts say about what's going on.
Yeah.
So it's not as bad as what you may think. And what are your options as a home buyer right now? I mean, it doesn't matter what the interest rate is. It could be 2%. It could be 45% on a home that you own. It's still substantially better than any rent that you throw out there. When you say,
And like I sitting in a listing appointment this morning, and the seller mentioned the Fed rate, and I was trying to go into those details of the rates and how things kind of work, and that comes in as part of our pricing strategy. I mean, if you want to try to push the limits, especially in certain price ranges, usually below 500, there's a lot of buyers that are not in the market anymore. They're completely off the fence and out of the market because of the interest rates at a lot of those lower price points. So it's something that we have to be cognizant. Big word. There's something we have to be aware of. Something we have to be aware of at all times, because everything is affected. It's the multiplier for everything that we do. So being able to educate buyers, sellers, the general public, and us agents, you lenders, and having those conversations, as tough as they can be sometimes. But let's say, like usual with the VA stuff, we dispel all the craziness and the rumors. Same thing needs to happen with interest rates.
Yeah. I mean, so the whole thing is from everything that I've gathered, and we're not going to go into depth on this because there's been plenty of posts out there, and I'm not going to get stuck in the water on this. But pretty much what the Fed did is they increased their fund rate last week, Wednesday, in hopes to kind of push us into a recession. And once we go into that, that's when interest rates all come back down. But the mortgage market is not affected by this, right? Because we've already accounted for this at the beginning of the year, right? So we have seen, and Jen, you've probably seen it too, at least 6 different price improvements of rates since the Fed announced it on Wednesday.
Correct. And everybody last week was freaking out when the Fed rate increased. I had a client that reached out to me and said, I ended up going with somebody different because they told me I needed to lock in today before the Fed increased the rate. I was like, did they tell you? That doesn't really make sense. But rates got really bad the Friday before. Nobody was talking about it then, right? Interest rates.
Yeah. Monday.
That day. And then Monday it was bad. And so they intertwine a little bit, but there's about 50 different factors that go into your mortgage interest rate. And so it's hard to properly articulate everything that goes into an interest
rate. When I told this seller today that interest rates fluctuate daily, he just looked at me like, they do? And I'm like, yeah, they're not just set. The Fed doesn't do something and the mortgage companies do something, and then all of a sudden they're there for a while. They change absolutely daily.
Yes.
They change every minute of every day that the market is open. I mean, I could go in there, hit refresh, and there's new pricing. Now, every minute it only change a couple pennies maybe, or whatever, but they change all the time. So
Yep. Correct.
if your loan officer is selling off a rate, then
Yep.
sorry.
Well, and even if, let's say, Andy, Brad, you and I, like if we all went today to go get a conventional fixed rate mortgage, and let's say we all had a 740 credit score, guess what? We all could still have completely different interest rates because there's so many other factors that go into it. Your down payment, loan to value, credit score, loan amount. Like there's so many different things that play into it. It's not just credit score based, and it's not based on what the Fed is doing.
The reserves is the biggest component that I see. Right. I mean, you could have somebody with a 700 FICO score, 35,000 in the bank versus 800 FICO score with 10,000 in the bank. The 700 FICO score is going to get more favorable pricing because they're less risky. That's it. So I think that's all we're going to talk about on rates right now, because I don't want to get too deep into this. But right now, yes, rates are high. They're high for a reason, inflation and all this other crap, which we've already talked about. But what are your options as a home buyer? Oh, go ahead, Andy.
So I don't want to say rates are high. The rates have risen, right?
Higher, yeah.
They are higher. They have risen, but
and they will continue to.
And they will continue to, but they are still historically low. And that was a listing appointment I did on Saturday, and I helped the seller buy the house, 5-6 years ago, and she said, well, rates are so high. And I was like, no, they're not. They have risen. They have gone up, and they may appear that way. And in some cases, they're pretty much double than what we've seen from something last year. But 7.8 being the historical average, we're below that.
Yep.
So we're still low, but this is still a good rate, right? It's still not crazy high. It's not 9, 10, 12. As far as the rates go, that's when we start seeing bigger problems, is when you're close to double digits and into the double digits.
Yeah. So
I had people last fall that said that they wanted to hold off until spring to shop.
What?
And then in January, they were like, oh, rates are in the 4s. That's really high. I think I'm going to wait. And I'm like, no, now guess what? Your rate's going to start with a 6.
Yeah.
So, I mean, you need to get into the market when you can and realize that your interest rate, just because you have an interest rate when you purchase a house, that's not the rate that you keep for the full 30 years. Most people will refinance in 3 to 5 years.
You said earlier.
Yeah. What I said earlier is I saw something on Facebook this week where it said you need to marry the house and you need to date the rate. So find your house, love it, move into it, and understand that the rate that gets you into the house today is not going to be the rate that you're going to have for the rest of your life, right? You're going to switch that up every couple of years. That's why it's so important to work with somebody that is not just a mortgage lender, but somebody that's an advisor that looks at your entire financial profile and can tell you, hey, here's what's best for you and your family and your financial goals in the future.
So I'll throw this out there to you, Jen. Let's say somebody bought a house 3 years ago. They have an interest rate of 3%, but they want to upgrade their house or move, but they don't want to face the housing market right now. What options do you offer?
The housing market can be brutal right now. So one option that some of my clients have looked at, which is eligible for VA financing as well, is a renovation loan. I have clients that love their neighbors, which when COVID hit, like it is so important to love your neighbors, right? Like when those are the only people that you saw, it's so important to love your neighbors. So I have clients that absolutely love their neighbors. They love different aspects of their house. Maybe they're in a wonderful school district, and if they were to sell now, they would lose a ton of money by going and reinvesting in another property. So they do a renovation loan. So you can do a renovation loan when you go to purchase a house if you want to make updates, but you also can do a renovation on a house that you already own, and you can do that for a VA loan as well.
One of the biggest things you just said, when you're purchasing a home, right? So you see a lot of these homes that have cash conventional as financing options only, right? Why is that? Well, it could be the lack of education of the actual agent, or it could be the actual property itself. So a VA renovation loan would be something that you could look into if you're out house hunting and you see these, you see this house that's listed for, I don't know, 150 cash conventional only because of whatever reason, right? You can actually do a renovation loan. Now, I don't offer them, so I don't know the whole process, but from my understanding of it is you can offer on the house and have the renovations done to meet the MPRs
MPRs
before you move in and before you close, right?
Correct. Yeah. I had a veteran that actually was looking at a house that had, it was an older house that had a bunch of windows broken out. And so, of course, that's going to limit any financing that you do, right? Like, you're not going to get an FHA loan on a house that has windows that are broken. But if you go in and you do a renovation loan, if you take a house from 50 years ago and you put all new windows in it, that is going to add a ton of value to your house, right? So there's different ways that you can work around. Just because a house is not, doesn't meet all the NPRs the day of closing, doesn't mean that you can't purchase it with a VA home loan. Through the renovation process, you can make certain updates to bring it up to those NPRs.
So as a veteran myself, I'm going to ask you a couple questions that they may be asking themselves right now.
Okay.
What sort of things can I use this for, and what can I not use it for? Can I upgrade I want speakers in every room of my house. Can I use it for that? No.
That's a very tricky question. So,
but
well, you have to make sure that the things that you add to the house are not just adding cost, but are also adding value. Okay.
That's why I use speakers.
So, yeah. If you want to go in and paint gold leaf on every wall, that's going to cost more than what it's not going to add value to the house. So you need to make sure that you are adding value and not just cost to the loan. Yeah.
Sorry, I was trying to ask you a question that was pretty easy to answer,
and I failed
because I've actually experienced that with a veteran who was pissed off that the value came in low because of $45,000 worth of stereo equipment throughout the whole house. Like, dude, that didn't do anything to the value. It was just cost. All right, so. A renovation loan is absolutely an option if you own the house right now outright, or if you're looking to purchase. Absolutely an option. Another option that Andy wants to talk about, which is my personal, I do not like this one, is the VA assumption. All right, the VA home loan allows for anybody, not a veteran, but it could be anybody, a non-veteran or veteran alike, to assume or take over a loan that's in place already. So this is, think of subleasing at an apartment. This is kind of what it's like. You find, if you're moving out of country or moving out of state, you find somebody to take over your lease. This is kind of the same thing. So if I'm moving from where I'm at today and I say, hey, Jen, you're not a veteran, right? So you want to move to Grand Rapids? Great. I got a house for you. You can just take over my mortgage, right? That's me putting all of my hard work, all my 4 years of embracing the suck of the Marine Corps on Jen to make a timely payment each and every month. Because if she doesn't, it's on me. And that's the thing that I don't like about it, right? Because my entitlement is tied up to my property. So if you fail to make the payments and it goes into foreclosure, it's not on you, Jen. That's on me, right? So that's why I don't personally like it, but it is an option, right? And people do use it all the time. The thing with the loan assumption is you have to go through the person who is actually holding the loan, or the company that's actually holding the loan, right? So it would be, for the most part, it'd be your 1-800.com lenders, right? They're the ones that carry or hold a lot of these notes.
Yeah, and they're going to set the standard for qualifications, and it's not going to be normal standards.
Yeah, it's not like you.
It's going to be high. They really, a lot of them are going to prefer that they sell the house because they're going to make more money by doing another loan, holding on to that low interest rate under 3%, 2.5% mortgage. They're not making much money on it. I mean, they're not making any money to service it either. So I mean, it's one of those things where it's possible, and I'm hearing about it here and there. Is it a great situation? Not exactly, but it is definitely an option that a veteran seller has. And, and as competitive as it is right now with the market, that, hey, it might be a viable option at some point.
Yeah. I mean, there's two other things that we want to talk about too. So we talked about VA renovation, which if you have any questions on that, send Jen a message. I put her contact information in the description of this. VA assumption, if you have any questions on that, just shoot, comment on here. We'll be more than happy to answer it. The two other ones. The first one, let's talk about VA cash out refinance. Right now is a pretty good option. All things considered, with the rising rate environment that we're in and the Fed fund rate increase, which there's going to be another one coming too. So A cash out refinance right now, yes, it in your head, why in the hell would I break a 3.5% rate and go with a higher rate today, right? Include all my debt in there, which that current debt is a lower rate. Like I understand that thought process. However, just hear us out here. All right.
Well, because most of the current debt is not at a lower rate. Most credit cards are at 24, 29%. If you've got any other debt out there, the interest rate's ridiculous.
You said the two magic words, credit card. Variable rate is what they are, right? And it's variable for one reason and one reason only. It's for the Fed fund increase, the Fed fund rate increase, right? Which is what we just went through. And we're going to go through another one. So your current credit card debt that you're carrying is going to be substantially higher in a few more months, right? So it would make sense to pull the equity out of your house to pay off all this stuff, right? In a fixed rate versus a variable rate, right? So that is an option too. Now, at the beginning of the year, this is going to sound a little weird. So there's VA guidelines and there's Ginnie Mae guidelines. Okay, so Ginnie Mae are the investors that purchase VA. For the most part, the Ginnie Mae guidelines are the same as VA, except for one. Well, there's probably more than one, but one that I can think of off the top of my head. And that was at the beginning of the year, Ginnie Mae capped out VA cash out at 90% loan to value. Okay, so lenders were capped because Ginnie Mae said, no, 90%, that's it. But the VA has always said, we will go up to 100%, no problem. Okay, except for Texas. Texas, this does not apply. Okay, so beginning of the year, Ginnie Mae said, yes, we can go up to 100% now. So many lenders are now coming on board. Okay, I'm actually closing one today, my first 100% VA cash out. Are you guys going up to 100%, Jen? Not yet.
I have not done a VA refi this year, so no, I have not.
It is an option. It's in the 90% loan to value means you're going to have to get a new appraisal. So if you let your house slide, you're going to have to kind of fix that up a little bit. But it goes up the appraised value. So doing a cash out refinance, I always feel like so bad because I can't give exact answers until we have the appraised value, because the appraised value right now is so different than when they bought it before, right? Because of all the increases in property across the country. So there's nothing set in stone with the cash out refinance until the appraisal comes back, and that gets really, really, it's uncertain waters that you're in, right? But with us, and I believe this is with every other lender, because Ginnie Mae's buying these, you have to create an investor pool. And once the pool reaches a certain number, that's when you can get the loans off the books. So in my case, we created this pool back in April. The bad part about this is that the veteran is now subject to current market rates, and they have to buy down back into the pool. So you have to buy 2 full discount points to get into the pool. Wow. Which sucks. It comes off your bottom line. Even with all the credits and everything that I gave, it was still approximately 11 grand to buy into it. And
Brad, are you seeing that vets are able to take let's say their total monthly debt that they're spending between their minimum payments for their credit cards and their mortgage and their auto loan, and if they have student loans, even if they're not for them, maybe they're for their spouse, and they roll that all into one debt, are they able to have a lower monthly payment long term?
Yes, it depends on. Okay, so you take all those debts and you included it into your new loan. You're still saving money per month because it's all wrapped into one payment. So in this scenario, even though they had to buy down the rate, and we included everything that we could inside of it, they were still walking away saving $225 per month with a higher rate.
Correct.
Right?
Yeah.
So,
and if they took that extra $200 a month and applied it directly to their mortgage payment, you're paying down your principal balance faster. And so you're no longer paying a 30-year mortgage. You're paying it off that little bit faster every single month.
Correct. And again, the underlying theme and what we say all the time, who you work with matters, right? I mean, there's a lot of loan officers that will just say, yeah, no, yes or no. They won't get down into the weeds with you, but you have to get down in the weeds to truly understand this and break everything down as easily as you possibly can.
And one thing you didn't mention earlier is that, now I'm not a tax advisor at all, but your mortgage interest on your primary residence can be tax deductible, right? How much the interest that you pay on your credit cards, is that tax deductible?
Nope.
No.
No, that's a good point.
So if you are paying interest either way, you're going to be paying less interest on a mortgage, and there's the potential that it could have tax benefits for you as well.
Correct.
Even if you don't have to buy down the rate, if you're in a more updated pool, and you don't have to buy down the rate, the rates at some point will go back down. So you do have the option to do probably your next one.
Great segue. Great segue.
Andy keeping us on task here.
It's the VA IRRL, interest rate reduction refinance loan, or IRRRL. Don't forget that second R, or the third R, because Facebook Fish will absolutely lose his shit if you forget that R. All right. So what is the interest rate reduction refinance loan? It's a streamlined refinance specifically to help save veterans money per month. Okay. So you get into it. Let's say you buy today, 5.75% rate, right? You feel a little jaded, upset, whatever it may be. That's fine, because at the beginning of this conversation, we start talking about the recession that we're heading into. The Fed is trying to push us into one. And once we go into one, what do you think happens to mortgage rates? They go down, right? They go down tremendously. So long as your interest rate drops a 0.5 percentage point, this is a slam dunk. You have to be in the property for at least 200. You have to have made 6 timely consecutive payments or 210 days from your first payment. You can refinance this. So if you close today, your first payment is going to be August 1st. 210 days from that August 1st date is when you can close on the IRRL. Okay. The IRRL there's no credit underwriting. There's just a credit pull to make sure that you've made on-time payments on your mortgage. There's no underwriting. There's no appraisal. I mean, you have to have a pulse and current on your mortgage, and we can close this thing in 3 days, depending on your current loan holder and how quickly they get us your payoff amount or your payoff.
You also have to make a 0.5 point or 0.5% reduction.
Yeah, that's what I said.
At least, yeah.
Your interest rate has to reduce by a 0.5 percentage point. So if you're at 5.75% today, in 210 days, you can refinance with the IRRL if a 5.25% rate is available, right? Which
now, is it expensive to do an IRRL?
Not at all. There's no out-of-pocket costs. All right. When you close your closing costs, every veteran's like, closing costs? I don't have to pay anything. Well, there's a difference between a down payment and closing costs. All right. So down payment is reducing your principal balance. Closing costs are fees associated with that transaction. So these are your title insurance or lawyer fees if you're in that state. Your escrow, so property taxes, homeowners insurance, HOA if you live in one of those bougie neighborhoods, and other fees associated with the loan. It varies from state to state how much it is. Good rule of thumb is approximately 3% of the purchase price. Anticipate that to be closing costs. All right. So at closing, you're buying into your escrows, which are always 12 months ahead. So property taxes, homeowners insurance. So when you do an IRRL or a refinance, any refinance, you have to restart your escrows because it's a brand new loan program, or loan, not loan program, but loan. So you get a refund of your existing escrows, but you're buying back into it. So it's a wash. There is no out-of-pocket costs, right? So there's no cash brought to the table unless for whatever reason you have to bring something, right? It's not going to be, if you have to bring something, which I've never seen it, and never say never. I haven't seen that yet.
Normally like a mortgage payment.
Yeah, or something, So once after closing, your first payment is 2 months after closing. So if you were to close today, it'd be August 1st. But those are the options that are available to you. So right now in this higher rate environment, it's not the end all be all. It's not a death blow.
So I got a question on that. Since it has to be a half a percent lower, are you able to say you're not quite there? Are you able to buy that down?
You can buy that down so long as it meets the break even. So you have to break even of all costs and fees in 36 months with the EARL. With the cash out, there is no recoupment period is what it's called. All right. And this is all because what was intended to be a benefit for us has turned into a shady lending practice for a lot of lenders. Right. And you receive these things in the mail probably 3 or 4 times a day. And if you do, actually, I'm going to put this in the description, how to opt out. There's a way to opt out of it. I did it myself. There's a digital format and an actual physical where you mail it in. And I have never say never. I have yet to receive any solicitation of phone calls or the ridiculous amount of mailers that most vets receive once they close on a purchase.
So
Okay.
Steph, my wife, who is not a veteran, she's on the loan with me, and it is a VA home loan. She gets letters in the mail about refining her VA home loan.
My mom and dad do as well. They're not veterans.
So you got to be aware of stuff like that. And I think, unfortunately, there's probably
it's only going to get worse in the months ahead. Like our buddy AJ made a post in a group recently about how, VA loans are a fantastic loan. And in a market where fewer and fewer FHA buyers and USDA buyers are going to be able to purchase in the rising rate environment, veterans are still more strongly qualified. And so a lot of lenders are going to go after them. And so you need to make sure that you work with somebody that knows what they're doing and that you trust and that has been out there fighting for vets for longer than just in 2022 when their mortgage portfolio started to shrink,
Yeah. Vets
need to beware because there are going to be some sharks in the water. And
I've done a couple of posts on those, a couple of videos just saying, hey, explaining like my wife can't do one. And the ones that I think it would hurt the most are the surviving spouses that don't get DIC, but are able to stay in the home and, because the husband passed away, whatever, or the spouse passed away. And, the surviving spouse stays in the home and keeps it because they're on the loan. But as far as doing, I think they can do EARLs, but as far as any other refi or any kind of changes like that, they can't use the VA home loan benefit unless they're in receipt of DIC. And we've talked about the DIC stuff before, but that's where it can get confusing because you get this letter in the mail. It's got your name on it, but you're not the veteran. And you call them up and start doing things. Next thing you know, you're out of the VA home loan and they're wanting down payment. They're wanting this and that. So you got to be very wary of those things. Most of the time, if it's in the mail, you throw it away.
Garbage. Yeah. Yep.
Well, or save it for emergency toilet paper.
Come to the internet for your facts. Don't look in the mail.
Come to us. We will steer you in the right direction to the right person.
Yeah.
Oh God, you just said a word that just made me. I'm not going to repeat it either. But it's 100% true. Right now the chum is being thrown in the water, and the sharks will be coming toward within the next few months. But you're right. My parents see things in the mail all the time about refinancing their VA home loan. It's like the whole purpose of these marketing materials is to incite you to take action. As Jen was saying earlier, interest rates. There's a lot of variables that go into the rate. It's not just, oh, hey, your FICO score is at 800. Here's what your rate's going to be. Yep. So how in the hell can these people put on their flyers that, oh, you qualify for a whatever rate, right?
Well, and I'm not ever going to tell somebody that I always have the best rates. Typically I do. But you know what? There are times when my clients have reached out to me, people that I've closed before, and they're like, I got this in the mail, or I talked to my credit union and they said they could do X, Y, and Z. And I'm like, that sounds a little too good to be true. But here's what you need to ask them. Ask them these questions, get me this information, and I'll look at it. And there have been times when I'm like, dude, if they're going to give you that, run. And I might be right behind you because that's really good. So that's why you need to work with somebody that you trust that's going to shoot you straight.
Yeah.
So too many times it's a bait and switch. So
exactly. So what good is, there's always going to be people with lower rates and there's always going to be somebody with higher rates. Right. But the question that always comes back is, are they going to be able to execute on that lower rate? No, you're heading towards a world of hurt, but it's not my responsibility to pull you along. I'm going to give you all the information that I possibly can to make sure that you are educated enough to make the best choice for you and your family. All right. If you decide to go with somebody else, hey, I wish you luck, strength, and honor on your upcoming headache journey, my friend. I will keep your loan file open in the event that, when you don't close and you want to come back, I still have all your stuff. But, rate is not the end all be all. It is not everything, especially nowadays. Who you work with matters, and it is everything. So I would rather close in a timely manner and have a little bit of a higher rate, 4.5 or let's say 5.5 versus a 5.25, right? In the grand scheme of things, that's $13, right? But you're now going to go from a 30-day or less closing to a 120-day or more closing, and you're going to be running around like a chicken with your head cut off trying to track down all these documents that these idiots should have gotten up front, and it just further stoking the fire of the VA home loan perception in our marketplaces. So screw that. That's not at all what we are about. So there you have it. We just went over all your options in this higher rate environment. Did I leave anything out, guys?
I don't think so. I will say, and similar on the real estate side, that especially working with a lot of sellers, is that this is similar to the highest and best, right? You get multiple offers. And sometimes we call for highest and best, and I don't like calling it that, but that's essentially what it is. And generally, you're sending in your best offer from the get-go for an actual serious consideration from the sellers, but highest offer isn't always the best offer. And that's why when you see that lower rate, it isn't always the best deal, because you got to look at the numbers behind it. They could be charging you fees that they're not explaining to you, and it does not help you at all. It may look great for the lower rate, but you're coming out of pocket, or they're adding it to the back end of the loan, and it doesn't make much of a difference. So,
and if your loan officer cannot explain those fees to you in a way that you can understand them, you are not working with the right loan officer.
Exactly.
Boom. Yeah. Bingo. Well said. Any final thoughts, Jen?
No.
I'm listening to this shush. No, I think we'll end it here. I thank you for coming on and talking shit with us Marines.
Thank you for having me.
If you guys have any questions on VA renovation or renovation in general, Jen's your girl. If she can't help you, we have a whole legion of loan officers behind us that are VA badasses. If you're a loan officer watching this, I highly recommend you check out Veteran Mortgage Advisor, our group that we created, Veteran Lending Council. We created the VMA group. I don't even know how many members we have now. We're over 500, I think. But teaching you the VA home loan like you've never known it before, deep diving into it, being able to understand and articulate the guidelines, and get out and be the VA authority in your area. Check it out, veteranmortgageadvisor.com, and I'll post that link in the comments as well. So thank you, Andy. Enjoy Nashville. Don't get into trouble. If you need the QRF, just call, bro. I'll come rolling.
Yeah, I'll contact you and AJ and everybody.
Well, AJ would be the first one. He's the closest for QRF for quick, response. But
he's got that Porsche, so he can get there. He can get there pretty fast.
Yeah.
Yep. But I mean, if he rolls with the Porsche, I mean, you're not going to be able to fit everybody in there. It's a tiny little car, man. My knees were up in my nostrils when I was in it. All right, guys. It was a pleasure. Get after it. Semper Fi. Talk soon.
Have a good week.